Ethereum mining is back in the spotlight this week, and it's stirring quite a buzz among US retail investors. With recent developments that could impact your investment strategy, you'll want to stay tuned. The landscape of mining on the Ethereum network is shifting, and understanding these changes could mean the difference between making informed choices or missing out entirely. So, grab a seat as we dive into what's unfolding in the world of Ethereum mining and why it matters for your portfolio today. This week, Ethereum mining is back in the spotlight as new data reveals a significant uptick in network activity. Just yesterday, Ethereum's mining profitability surged by over 15%, reaching an average of $0.12 per megahash. This increase has many miners excited, especially since the overall Ethereum price jumped by 8%, currently sitting around $2,000. Institutional players are taking notice. BlackRock recently announced their interest in Ethereum-related investment products, signaling confidence in the asset's future. This could lead to more retail investors considering Ethereum mining as a viable option, especially with platforms like Coinbase offering user-friendly setups for new miners. But it's not just about the numbers. The Ethereum network is undergoing important updates that may affect mining dynamics. The anticipated Shanghai upgrade is set to roll out on March 10, which is expected to enhance transaction speeds and lower fees. This could mean more profitability for miners and more incentives for retail traders to join in. However, with these developments come regulatory considerations. The SEC has been keeping a close watch on mining practices, ensuring compliance with existing laws. It's essential for U.S. investors to stay informed about how these regulations may impact their operations on platforms like Fidelity and Coinbase. As you weigh your options, remember that any profits from mining will also have tax implications. The IRS considers mined cryptocurrency as income, which could affect your tax filings next year. So, as you explore Ethereum mining, make sure you're prepared on all fronts financially, legally, and strategically. This could be a pivotal moment for miners and investors alike. As Ethereum mining continues to evolve, it's important to consider how this impacts everyday investors. This week, let's break down how a U.S. retail investor could navigate the landscape with concrete numbers in hand. Imagine a retail investor named Alex who decides to mine Ethereum. After investing in the necessary hardware and electricity costs, Alex estimates a potential monthly earning of around $300 from mining. This scenario sets the stage for some financial decision-making. Now, Alex has two options for turning those mined coins into cash: Kraken and Coinbase. Both platforms are reputable and compliant with U.S. regulations. On Coinbase, the current conversion fee is about 1.49% for trading Ethereum to USD, while Kraken offers a slightly lower fee at 0.26%. That's a difference of about $4.50 for our investor when exchanging $300 worth of mined Ethereum. But here's what nobody is saying. While those fees seem small, they can add up over time, especially for retail traders who might frequently convert their earnings. If Alex uses Kraken, the $4.50 saved on fees translates into nearly 1.5% more Ethereum to reinvest or hold. Additionally, there's the question of security. If Alex opts for a wallet service provided by these exchanges, he should weigh the pros and cons. Coinbase has a user-friendly interface, but Kraken's advanced security features may offer extra peace of mind for those concerned about hacks or theft. Now, let's consider an alternative approach. Instead of cashing out immediately, Alex could use some of those mined earnings to participate in DeFi protocols. By staking Ethereum on platforms that offer yield farming, Alex could earn additional returns while holding on to the asset. All this plays into the broader picture as well. With the IRS treating mined coins as income, it's vital for Alex to keep records of both the mined Ethereum and its converted value. This ensures that when tax season rolls around, he won't be caught off guard by unexpected liabilities. As we look at the broader economic implications, the Federal Reserve's interest rate decisions could affect market sentiment towards Ethereum. If rates rise, it may impact liquidity in crypto markets, further influencing Alex's mining strategy. In summary, Ethereum mining presents both opportunities and challenges for retail investors like Alex. Choosing the right exchange and understanding the fees involved can make a difference in earnings and overall strategy as the market evolves. If you're considering diving into Ethereum mining this week, here are 4 actionable steps to get you started. First, assess your hardware capabilities. Depending on the current price of Ethereum, investing in a robust graphics card can cost anywhere from $500 to $1,500. Make sure your setup can handle the computational demands to optimize your mining efficiency. Next, Create an account on a compliant exchange like Coinbase or Kraken. These platforms allow you to buy Ethereum easily, and you'll need some ETH to pay for transaction fees associated with mining. Aim to have at least $200 worth of Ethereum on hand for this purpose, to ensure your operations can run smoothly without interruptions. Once your hardware and funds are in place, consider joining a mining pool. This can increase your chances of earning rewards consistently, especially as a retail miner. Look for pools that charge low fees, ideally around 1% to 2%, to maximize your earnings. Research the pool's payout structure to understand how your profits will be distributed. Lastly, keep tax implications in mind. The IRS treats mined crypto as ordinary income, meaning you'll need to report it. Set aside around 15% of your earnings for taxes to avoid surprises come tax season. Staying compliant with regulations is crucial, and using a tool like cryptotrader.tax can help you track your mining profits and report them accurately. As we look ahead to the next 90 days, Ethereum mining is poised to evolve significantly, with new technologies and strategies coming into play that could reshape the landscape for miners and investors alike. Remember, staying on top of tax obligations is essential as you navigate this dynamic space. So, what do you think? Will the shifts in Ethereum mining create more opportunities or challenges for retail traders? Be sure to share your thoughts in the comments below, and don't forget to subscribe to the channel for daily crypto updates.